Most people think the ACA premium tax credits are expiring, and that's just not the case. The enhanced premium tax credits are set to expire at the end of 2025. The original premium tax credits are still available. The price for insurance is based on benchmark plans, income percentages, and where you live. Not understanding these changes could cause you to spend thousands of dollars in excess of what you should or could have spent. People think that there is no help available when there actually is. So understanding these changes is very important. So let's jump into what these tax credits are and what's going on. So advanced premium tax credits, these come from the government. They lower the ACA health insurance premiums. They are paid in advance directly to the insurance companies, and they're based on your estimated household income for the next year. So if we're in 2025, it's going to be based on what you think the 2026 tax year will look like, okay? They're reconciled when you file your taxes, okay? So what that means, you're estimating your annual income. So let's say I project my income to be $50,000. The IRS, they're going to pay part of the premium to the insurance company. I'm then going to pay the difference of what's left over. When I go to file my 2026 tax return in 2027, what's going to happen is they're going to reconcile any difference, right? So I'm going to get a 1095-A form from the exchange, whether that's a federal exchange or a state-based exchange. I'm going to give that to my accountant. My accountant's going to fill out a form 8962, which basically says, okay, this is the subsidy that I got. This is the subsidy I should have got based on what my income ended up being, right? And then that difference will be reconciled. So it would either be taken out of a tax refund or added to a tax bill. This is percent of income of the federal poverty level for 2025. So basically where folks qualify for a subsidy. So the big change is 400% of FPL. So with the enhanced premium tax credits set to expire, it's the folks that make over this amount that are going to be most affected. With this enhanced premium tax credits, even folks over this amount wouldn't pay more than 8.5% of their income for what's called a benchmark plan, which is the second cheapest silver plan offered on an exchange in their area. Okay. So you can see here, family of four, you're still getting a subsidy up to $128,600 and so on and so forth. The cutoff for one person is $62,600. Okay. There's still subsidies, there's still credits available, but just to give you some history on what's going on. So the American Rescue Plan Act, so when they passed this because of COVID, they expanded the tax credits above 400% of the FTL, like we just demonstrated, right? And it capped premiums at 8.5% of income for that benchmark. And it did increase subsidies across all income levels, which will kind of explain how that's being affected, how that's changing. Now, when this was passed, it was meant to be temporary, right? It was meant to help people get through COVID, right? And then what happened? A little while later, they passed the Inflation Reduction Act. So what the Inflation Reduction Act did, it extended these enhanced premium tax credits through the end of 2025. The cliff, or what they used to call the cliff, that's when you're over that 400% of FPL, the federal poverty level. Okay. And again, this was a temporary extension. It wasn't meant to be permanent. Okay. So it was extended once already, set to expire at the end of 2020. The folks that are most affected, like you'll hear different stories from different outlets, wherever you're getting the information, but it's really the folks that are over 400% of the FPL, right? Okay. And you'll hear, self-employed folks, people in these age ranges, different demographics, but again, these are average monthly increases, right? You can see if you're in this below 200% of the FPL, which if you're a single person, that might be around like 20 to 30 grand. You're not going to have much of a premium increase. if at all. And I'll explain that if at all here in a little bit. Okay, family of 4, subsidy example, 85, they make 85,000. This is a FPL for a family of 4, so they're 272% above the FPL. Expected premium contribution, again, no more than 8.5% of their income for that benchmark plan. The subsidy basically covers the rest of the premium, right? And then we talked about how this reconciliation happens at tax time. So if I estimate my income to be 50,000, I go to do my taxes, my income ends up being 70,000. Some of that subsidy, again, would be due back on a tax return or taken out of a tax refund. It also works the other way around. If I use 50, ends up being 30, I'm going to get more money back on my tax return or have my tax bill reduced. Okay. So that's what's going on. Now, this is kind of the difference with these enhanced premium tax credits and without them, right? So this is that same family of 4. Now, your zip code and where you live plays a role in this as well. So this is just an example based on this zip code here in Eastern PA. So with the enhanced credits, you're getting $1464 a month. Without those, it's $1160 per month. So one thing that these enhanced premium tax credits did, it lowered the percentage that you're paying for that second lowest cost silver plan, the benchmark plan. Without the enhanced premium tax credits, you're paying a higher percentage for that benchmark. Okay, so you can see cost $324, cost $629. So in this example, this would go up. Now, it doesn't always mean your premium is going to go up because you may be on a bronze plan. So a bronze plan where it's saying 0, that's because this subsidy is enough to cover the bronze plan premium, right? So folks may have the option of going from silver to bronze if they're seeing a large increase, whereas on the bronze level, they may not have seen that same increase. And again, it depends a lot on the plans that are offered on the exchange in your area. Okay, so this is really what the big difference is. So when they pass the Inflation Reduction Act, extending these enhanced subsidies, if you're in these percentages of FPL, this is the most you could pay for that benchmark plan, right? 8.5%. Now, without those enhanced credits, or in 2026, those percentages go up, right? So again, you could see, this is the big thing right here, right? Even if you were over 400%, you were still capped at 8.5% for that benchmark plan. Now, if you're over 400%, there is no subsidy, right? So you could be an individual making $62,599 and get a few $1,000s a year in subsidy, or you could be somebody making $62,601 and not get a subsidy, right? And in those situations, there's also things people can do, like putting money into a qualified plan, utilizing an HSA, things to reduce your taxable income, right? So there's things you could do to kind of stay below that threshold if you're cognizant of it and you understand what's going on when you do your taxes as well, okay? So, and then you can see that based on per FPL level, the percentage is going up slightly as well. So that's a difference here. Now, in some situations, people will say, oh, well, my premium actually went down, right? Well, that can happen if the cost of the benchmark plan goes up, right? So one of the things that these insurance companies do to increase the subsidy being offered is they'll raise the price of their second lowest silver plan, right? So sometimes you'll see a silver plan more expensive than a gold level plan, and that's because they're trying to maximize the subsidy by making that silver plan expensive. Now, it doesn't always work when you have multiple insurers in one location, right? So like one insurance company could do that, but then you may have another insurance company that has a low-cost silver plan, and then the benchmark becomes the second cheapest one. So it doesn't always work, but when you're in locations with not a lot of options or 1 or 2 carriers, a lot of times you see subsidies that are really high. And that's because what these insurance companies do, they try and maximize the subsidy being offered for that benchmark plan. So they'll raise those rates. So that's why you could see some people say, oh, my cost went down. Others say my costs went up. Most people will see a cost increase, especially if you're in an area where there's multiple carriers offering plans, right? So these are the percentages. More videos on these topics, ACA, Medicare, you can check them out right here. Thanks for jumping on.